Okay, so very good morning then. Welcome to the briefing for Tuesday the 20th of September. And just taking a quick review, first of all, of some of the market moves from yesterday. Any of you who followed the strategy report we send out in the afternoon had a very tight move to the stop, but we were it was still in play. It didn't quite touch the got to within a quarter point before then hitting target 1 and target 2 on our S&P yesterday. Will was on the technicals, so he'll be doing so again today. I do suggest that every day you get in the habit, new guys, of taking a read of that strategy report. Not to say to copy it every day, but certainly you should be aware of at least what someone of experience such as Will is looking at on an intraday basis. And the reasoning with that trade yesterday in particular, why it kind of made sense at that point in time, was the market is somewhat in a bit of a consolidation mode now ahead of those big events which are looming, i.e. the Bank of Japan overnight and the Fed, of course, tomorrow evening. And after that large degree of volatility that we had in the last week, or I should say 7-8 trading days, it's not unusual to see this kind of price pattern, kind of the ranges getting tighter and tighter into the big event as people, well, it's a lack of really participation ahead of the main event. And so hence the reason why he was looking at that top that we had from Thursday as initial short with a stop sitting just above, and then managed to execute that quite nicely. Quick look at some other charts as well this morning. First of all, the DAX, as you can see, just your typical DAX opening, big bout of volatility at the open, initial spike higher at 8 o'clock. Obviously this is when the cash markets open. One of the big reasons why we did have a bit of a blip higher is, hopefully you guys know of a company called Bayer. So Bayer, a pharmaceutical firm listed in Germany. It's the largest company in the DAX index by market weighting. Let me just show you this, it makes a bit more sense. So the DAX, as you know, is comprised of 30 constituents. You can see here things like Commerzbank, for instance, is one of the smallest in the index, accounting for 0.6. But Bayer accounts for 10%. This is what I was talking about, I think it was last week, when it's important to know your size of index-weighted stocks within an index. So if you hear breaking news or there's a pre-market open report about a bank or about a company, let's say upping profit forecasts or profit warning, anything like that, if it was Bayer, BASF, Siemens, SAP, that is going to have a read across into the index and the index future. In this case, Bayer, obviously they've just laid out a huge amount of money, $66 billion, to buy US seeds giant Monsanto. So people are looking now, forward looking for the prospects of profitability of the company, and they've essentially come out and raised their peak sales forecast for their biggest new drugs. In fact, the 5 drugs that they're suggesting have sales potential of $11 billion in part of their new medicine portfolio. So certainly some decent news for them. They're seen higher. That's helped boost the index somewhat this morning. However, as usual with the DAX, you've just got to be a little cautious about trading it around the first few minutes, because some of you guys in the live room now or on the floor trading live markets for the first time, that first 5 minutes can be very whipsaw price action. As you've seen, we blasted higher immediately to R2, then came all the way back down before we moved higher again. So sometimes it's a little bit better to just maybe identify a bit of a trend if you're not able to immediately jump on that initial move. Some of the more experienced guys, Ayodeji, I know you in the live room, you managed to execute that well. But remember, in those kind of bouts of volatility, it's about short, sharp type movements, so your, duration of trade is much shorter. Likewise, just taking a look at the euro this morning, you can see here, again, we saw a bit of dollar movement. Just be mindful in the FX markets, you tend to see some movement around, I'd say, between 6 and 7. That's when generally UK, European traders come into their desks. You start then to see potentially a bit of FX movement. Remember, London is, termed the FX capital in terms of the amount of volume that goes through this financial centre. And so the dollar saw a bit bout of weakness. We blipped higher, run some stops through that high print that you can see from yesterday afternoon, and then it's just finding a bit of resistance there at the moment, which coincides with R1. That also is around those lows as well that we're seeing back on the 9th. That was the Rosengren comment. That was when the dollar moved higher, and that moved lower in euro dollar, and then as well was fairly close, providing a bit of support back on the 13th. So quite an interesting level there in the euro. Today's session overall, I would say, is probably going to be very similar to yesterday. So it's just about keeping things tight, keeping, as we always say, plenty of ammunition for the main event that's forthcoming, which is the Fed. So you don't want to be putting yourself on the back foot early in the week when arguably you might see more clearer, sizable moves, which will provide better opportunities in the second half of the week post-Fed. Talking of the Fed, a couple of other things that I have seen. I don't want to go on about it too much today specifically because I know that will be the main topic tomorrow. But I did see this chart yesterday. This is basically a chart summary of market implied probability of rate hikes just prior to meetings. This is dated from 1994, you can see 95, 97, 99, all the way up to December of 2015. That was when the Fed last hiked interest rates. So you can see the implied probability of when the Fed have pulled the trigger. Now you'd have to go back to February 1994, when the probability was around, I would say, 35%. That was the lowest, as far as this chart's concerned, that the probability has been, and the Fed have actually gone ahead against what the market was priced and increased interest rates. Remember, on the FedWatch CME tracker, we're at 12%. That's the black line you can see here. So normally, the Fed want to very clearly communicate what they're going to do to the point of which it's very much priced into the market. Looking at this chart, it couldn't be any more different. The market is so ill prepared. If the Fed were going to surprise, certainly this would be very unusual. One caveat to that, though, is this is looking at purely statistics. I think that actually this chart is a little bit misleading because you need to take every Fed decision in context of that given point in time of the economic cycle and the economic environment. And for me, even despite what this is telling you statistically, it doesn't really, for me, discount the fact that they might go ahead and act this time round. I still don't think that they'll do that, but I think that certainly the market pricing at, let's say, 12% is a little bit complacent. Another thing as well, interesting, we talked about yesterday, hedge funds were bailing out of bets on gold at the most rapid pace in 3 months. This is gold here looking a slightly longer dated. So not even disappointing US economic data has been able to revive gold prices. If you think about it, you had that pretty disastrous ISM reports, the non-farm payrolls is pretty lackluster, and even in spite of the perception is pretty low that the Fed will act tomorrow, gold has continued to remain on the back foot. And given what we were saying, even if they hold, ultimately they could sound more hawkish to keep open the option of future rate hikes. And looking at that basis alone, hard to argue against this trend continuing of potentially lower prices in gold. But that being said, I do feel that there's one potential spanner in the works, and certainly that lies on more the global political situation. Will touched upon this yesterday. No one thought Brexit would happen. Absolutely no one really thinks Trump will become president. Let's see. Also as well, we've talked about the Italian, the Spanish situations politically are in not good shape at this present point. You've also got UK's not even begun its negotiations about what the Brexit might look like. And so there certainly is, going into the latter part of this year and certainly into 2017, a lot of political risks that could be the saving grace for any longs in the gold market. Finally, just taking a quick look at another article Will shared with you guys in the Facebook group this morning, and it's quite actually it's a fascinating read. You guys, the way that you're taught by your mentors, and quite rightly so, the gradual process you go through Sam, Saif, and Vas and Ben of identifying key technical levels, styles to how to look at the market in terms of interpreting fundamental news and so on. But then you get Will jump on the mic and he just seems to have the knack or the touch, if you like. And there was an article in the FT this morning that I think is very interesting because it talks about man versus machine and gut feelings, the key to financial trading success. So I'm going to read a couple of lines here to kind of summarize the article, and then we'll have a quick chat. So it's a study by Cambridge University and a study of 18 hedge fund traders. And it was talking about the ability to sense the state of the body, and the ability to do that made more money, and they survived for longer in hectic financial market conditions. By combining body and brain, the best human traders can outperform computer algorithms. Traders in the financial world often speak of the importance of gut feelings for choosing profitable trades. They select from a range of possible trades the one that just feels right. And the findings in this study suggest that they manage to read real and valuable physiological trading signals even if they were unaware that they were doing so. So essentially what they're saying then is that if we focus on conscious mind and model it is a piece of software, we'll conclude that humans are doomed. That's if algorithms were to become champion. But if we recognize that the body and brain act as a single functioning unit, that they form a parabolic reflector collecting signals inaccessible to the conscious mind, then we will also recognize how exquisitely we are constructed for rapid pattern recognition. Now, this is one of those things where, when you watch someone like Will trade, the reason why someone like me and Vas are always a little bit more cautious with you newer guys or newer traders is because someone like Will's traded the financial markets for something like 15 years. He's been in high stressed situations and he's lived through various economic cycles, various types of different news coming out, seeing the impact, and almost subconsciously now he has a better intuitive feeling about how he feels about the market. But you can't expect that to come immediately. If I was to put one of you now on the spot in the middle of a World Cup final and ask you to take a penalty, you will crumble, or the final serve on championship point at Wimbledon, let's say. Now, that amount of pressure, you will not perform because you're not used to it. The key here, I think, about becoming more aware of your physical state, i.e. this study goes on to talk about things like your heart rate, for instance, and identifying stress and being able to counter that almost subconsciously, is that without putting yourself in those positions, then you're never going to be able to then perform under a real life stressed situation. And that's why you guys, when you go on through the course and you go on beyond this, it's about clocking up the miles. I've used that example before about an airline pilot. It's the most experienced pilots who are given, let's say, the most difficult flight patterns or the biggest jumbo jets. They're the guys who've racked up the most miles. Now, if you think about it, a new pilot completely trains on a simulator up until the point where he actually goes onto a plane. So it's about clocking up the miles, and then the more miles you get in a live flight as a pilot or a new pilot, the more responsibility you are given, and so on and so forth. So it's a very similar read across in regards to what these studies are suggesting. So, don't expect too much of yourself to be able to have this inherent feeling for the market. And I think Will testify for one, it's something which takes years to develop before you start to, let's say, see the code in the matrix, so to speak. But it will come. It just takes time in front of the screens and patience and in order to develop oneself. We'll forward this article out. I'll send it out. I'll attach it to the strategy at midday. It's a great article. It's a nice, short, sharp read, but certainly something for you guys to have a think about. Moving on, a quick look at the calendar for today. It's very quiet overall. In the morning session, nothing really too much to speak of. At this point, looking at the new guys, you've been pretty, I would say, fairly active. Just stay calm. There's not really a great deal coming out. As I said, the market may have the propensity to define some fairly narrow ranges ahead of what's going to be a high volatility day tomorrow evening. This afternoon as well, we do have some housing data, albeit not a major focus of the Fed. It is, I guess, tier 2 possibly data. Looking at the building permits, you can see have been fairly consistent in pattern, and housing starts have actually been on a nice upward trend. Actually touched their highest since February, the last reading that we saw. So housing data certainly more of a supportive area for any of the Fed hawks. And then you've got the API crude oil inventories as per normal, but not until well into the evening and after the NYMEX pit close. Okay guys, so that's pretty much your morning briefing. Enjoy your session. Any questions, please put them in the chat. As I said, that article I spoke about in the FT, I'll see if I can pass that round to you guys with the strategy this afternoon. So enjoy your day, and I'll catch you in the chat room. Thank you.